You did touch on the First Nations, so this might have partially been answered, but I'll read it in its entirety. My largest concern is the First Nations buy-in. Are all of the relevant First Nations on board with a mine going through? Is there a binding agreement in place? And if not, then what is the timing to have a binding agreement in place with all First Nations?
Right. So this is a really important question, because I think this is probably the single most frequent question we get, obviously being on the island. And, since I've started about 3 years ago, I've assured people that I am obviously an engineer by training, but I'm a business person. And the first thing I ask, I don't ask about the geology, I don't ask about the economics. I ask whether or not a project like this is acceptable to the community, right? I have my meetings with the First Nations group. I have my meetings with the community. Like, I'm an entrepreneur by heart. That is the essential question that has to be something I'm comfortable. The answer has to be something I'm comfortable with in order to spend my time, which is extremely valuable, I think, personally, and to progress a project that has this much significance and this much impact, positive impact on not only the First Nations, but the broader community as a whole. And so that was my first question. And I came across pleasantly with the answer that yes, there is will. Like, they're not going to provide consent today because there's not something that we're putting to them today, or there's not a project that is being developed today. And this is where the industry has really gotten skewed, right? It's this idea of developing the plan and the project first, and then putting it to consultation for First Nations. That often doesn't work because there's lots of things that they haven't considered as part of disruption on the traditional territories of these First Nation groups. And so what we've done from the very beginning, and it was, it certainly wasn't without some sort of drama, but what we did at the very beginning was we established agreements with our First Nation partners that were consent-based agreements. So we would actually get their consent to do whatever on the project that needs to be done on the project, in this case, 5-year exploration drilling permits, prior to going through the Crown process. And so what that did was it, established a trusting relationship through the First Nation groups, affected First Nation groups, and ourselves. B, it provided them the capacity and the ability to receive information to assess these things from the very beginning, as opposed to being just thrown the solution, which just may not work for them. So they were part of this discussion from the very beginning in terms of how we are looking to develop this project. So obviously the big permits are going to be coming up later when we go for our development permits in the future. But the framework that we've established with the First Nation group that's caused not only a successful permitting period, but a contracted permit, 14 weeks, getting our permits within 14 weeks versus some of the larger companies that take 18 to 24 months to get these permits. Like, even if you go to other countries in South America, including Peru, you're waiting a year to year and a half, 18 months to get your permits. We got ours in 14 weeks. So that has to tell you that the consent-based approach around our First Nations relationships is the right approach for us. And the reason why it's the right one for us is because we know that fundamentally we have the will of these groups to inform themselves on what the proposition is at this point, right? I can't say that there's a consent-based, I can't say there's consent for this project as we've defined in the PEA, because we haven't gotten to that stage yet. But I can tell you that the approach that we're taking today has resulted in these stage gate successes, including receiving a 5-year MIAB in 14 weeks.
Okay. Hi, Sam. Your company has outperformed pretty much all of its peers. What's the main reason for this, and how do you think the company can continue to outperform?
So I think there's a lot of reasons behind this. The first one I'll just address because I was talking about it, right? So if you can actually, unlock this conceptual lock of being on the northern end of the island which historically has been a natural resource extractive industry area, then the proposition from a valuation perspective is enormous. And if that's the main hurdle, then there's going to be value appreciation no matter what you do from an exploration perspective, right? And so I think when I first started, we were trading at, I think, 3 cents to the dollar on our NAV, like 0.03 times our net asset value. And just the conceptual unlock would get us to the point where we should be trading at 0.2, which is effectively a significant appreciation from where we were. So part of the appreciation, I think, has been recognize that, you know what, we're part of BC. BC is open for business. We're critical metals. We're part of the solution around this decarbonization and electrification of the world. Like, we are not digging a hole in the ground just for the sake of doing it. We're doing it to solve a problem here, and we're doing it in the most sustainable way and responsible way possible to solve these issues, right? These issues are not simple issues, and we are endeavoring to be part of the solution. The second reason is obviously, and probably the big reason, is the exploration success. As I said before, the project as defined today is a second half of the cycle project. This big copper porphyries. I think, Ashley mentioned at the beginning of the talk today, I've spent probably 20 years of my career in M&A, $100 billion. The vast majority of that value proposition happens second half of the cycle for large porphyry systems like ours, right? So this is no mystery to me that this project is going to be developed and it's going to be advanced, and the value is going to be realized at one point of the cycle. Where are we in that cycle? Well, I keep on saying, I've been saying for the last 3 years, we're on the precipice, we're on the fourth inning, fifth inning. A lot of these disruptive events around inflation, post-COVID, war, all these events really kind of stalled and stifled that momentum and progression, right? And we're starting to see that unlock a little, and certainly with what's happening across the world in terms of inventories, copper inventories being at all-time lows, smelters essentially charging nothing to process the feed, we're seeing copper prices respond. But the key, I think, as I mentioned before, is how do you bridge that kind of medium to long-term proposition, that big copper proposition, with something that is high return, high value today, in today's cycle, when investors are a little bit sheepish? Well, the answer is Northwest Expo, we believe, and we've been in the last year systematically providing evidence that Northwest Expo is something that can be that bridge, that, call it 10 to 12 year bridge to the much larger project with higher margins. And as I said, we reported NSR values of almost $70 per ton, which is almost 3 times higher. These are value of minerals in a rock post recoveries and post costs, right? So that number is 3 times higher, over 3 times higher than what we had at the existing project, which means that you could potentially build something that is lower capital intensity, that can bridge a project to the much bigger proposition. So that makes us relevant in today's cycle, right? So we're trying to be relevant across the cycle, not just in the second half of the cycle, but we're trying to be relevant in today's cycle. The third reason, which is almost a subset of the second reason, is within this program of defining this resource, we hit a massive interval of 135 meters of about 2 grams per ton, 2.1 grams per ton gold equivalent. And within that was, I don't want to be overly technical here, it was a hydrothermal breccia that came up from surface that had over 5 grams per ton within this hydrothermal breccia. And so this has really caused a lot of interest, I guess mostly even within our exploration team, to try to find the source of this higher grade porphyry, right? And so we believe it's to the south of the Northwest Expo, and as I mentioned before, we've allocated about 20% of our funds to go after it in starting in about a month's time. So I think, obviously, exploration is exploration, and it's risky, and you have absolutely no guarantee of success. for it. But we believe that, we've got a pretty good hypothesis and thesis, and we've actually shown a number of really strong results that triangulate and vector into this area. So we're hopeful, but I think the underpinning value of the company is being defined every day now with not only 5 billion tons of copper equivalent, but this incremental million plus 7.7 million ounces of gold resources that we've just defined in indicated and inferred respectively. And then the last thing, there's so many of them, but I think this is the reason why we are outperforming, is, I can't say enough about having, solid individuals, cornerstone investors that, as I said, have made billions of dollars for themselves and other investors through multiple cycles investing in our company. Because it's not only the credentializing what we're saying here, it's also putting money where their mouth is. And at times where we needed their support, when we weren't institutionally relevant, they were there. And now that we are institutionally relevant, and we're obviously getting attention from the likes of Franklin Templeton's, etc., they're still there. They're still exercising. They're still supporting, and they're long-term shareholders, right? So I think that is critical to the nature of any successful company, especially in a market where there's a complete dislocation of the haves and have-nots. And even if the have-nots have great plans and great projects, they just don't have the ability to advance these projects because they're just sadly undercapitalized.
Okay, Sam, looking at the macro copper chart, it looks absolutely time for a nice move upwards. Do you follow this at all?
I do. It's and I've learned that I can really eat crow very, very quickly when I make these types of statements and predictions. What I am very comfortable with is the long-term and the medium-term proposition. As I said, the world has activated around decarbonization and the electrification. Well, you can't decarbonize without electrifying, and you can't electrify without copper, right? So, as I look at all the commodities that I dealt with over the last 20 years as an investment banker, the ones that resonate 100% are copper and gold, and perhaps even uranium, because these are the solutions to the big problem that we face around this decarbonization. And you can either believe or not believe in decarbonization or not, but the world has mobilized, right? That is fact. Like, I'm not here to preach the gospel of green energy, but I am here to say the world has activated, and there are trillions of dollars that are now being spent to try to advance this strategy, right? So in that sense, the medium to long-term prospect is, I think, fantastic. There's no doubt about it in my mind. What's happening in the short term was not really a surprise, because we started seeing sometime in the beginning of the year TCRCs. These are treatment charges and refining charges that are set. They're costs that are being set by smelters to essentially have feed supply, concentrate feed and supply. These numbers were dwindling down to nothing, and I think they're down pretty much close to zero right now. And so what happens in this environment is it's a result of the fact that there's not enough supply coming from the mines, and B, there's also sorry, I should take that off here. There's also this fear that smelter capacity is actually going to contract. And when smelter capacity contracts, which is a pretty significant possibility, then the end product, the refined metal and inventories, contract even more. So it's a double whammy that happens. So what we're seeing in the copper prices today is a reaction to this cascading effect, starting at the concentrate feed from mines to smelters, charging nothing for processing it, to potentially contracting and therefore exacerbating the inventory shortage that we're seeing today. I don't know if that directly answers your question, but it's the reason why we're seeing an upward momentum in copper. Obviously, from a technical perspective, if you just look at the charts, the momentum is in favor of copper kind of hitting well, like, I mean, you can look at it yourself, but we're certainly on that trend where we've broken through the former basement at about $4, and we've seen that support progressing to increments. Think about the technical charts, increments of 50 cents, so $4, $4.50, $5, $3.50, right? And if you think of, you know, the how the technical traders look at the commodities, that's kind of the increments they look in. And I think we're in, you know, reasonably safe territory now, you know, where we're at today.